Hello, once again, I'm brschultzSP500. Thank you for joining me. It's January 16th, late night, and tonight I wanted to combine my peak call and my next bottom call on January 27th. So looking for a peak on January 21st, plus or minus 1 day, so it could happen tomorrow, January 17th, because January 20th is a non-trading holiday, and then that would push, I believe, the next crash into January 27th. Early morning could be very similar to January, what was that, 13th, where we saw the markets crash into the Monday of the following week, and that was the bottom. And so, as some of you know, the gold wave was pretty close to calling the worst low. It called January 14th the worst low, or the lowest low, but it was actually January 13th. And so I've obviously, trying to fix that error, pulled the gold wave ahead a little bit so that it would have called January 13th instead of January 14th. For the lowest low in markets. And so so I want to show you those models tonight. Quick review of the January 21st peak, and then obviously I want to review the 27th crash, and then some back testing that went with that. If you sincerely enjoy my work and want to donate, feel free to use the PayPal link down below this video in the YouTube channel, or you can scan these QR codes. Thank you for joining me today. So again, quick review of this. Basically, the gold wave has 4 touch points. The 4th touch point you're seeing with the number 4 going out to roughly January 21st. And then you also have the red 1, 2, 3 red trend line going out to roughly January 21st, very early morning hours. I couldn't really tell if it's in between, in between dates, whatever, early morning, blah, blah, blah. Could be end of day, January 17th. Don't really know. That's why I have to call it really 21st plus or minus 1 business day. If we see a dramatic move up tomorrow markets because of this 1, 2, 3 in the green wave, I might consider selling. Depends on where how the moving averages are responding, everything, and if we do get the dramatic rise in pricing that I'm looking for, because this green 1, 2, 3 I believe is predicting that there will be some type of major thrust upwards in markets. And so if I see a major thrust upwards in markets, that's kind of like the bells and alarms going off in my mind saying, hey, you were looking for this. Then I start looking for moving average, look for some type of cross on the 2 hour, 1 hour, 45 minute type thing, or I'm looking for a death cross of some sort, right? Where it would give me some kind of signal to start my short position. So my plan is right now to take a rather large short position tomorrow if we see a giant move up tomorrow, or a very strong move up. Let's say we see 40, 50 point move upwards tomorrow, right? I shouldn't say that's giant, but a good 50 points upwards, back up to around what, 6,000, I think. Yeah, around 6,000. Let's say we tag 6,000 or whatever. The 34, I think it's like the 34 a day SMA on the SPX500 USD. Say we pop ahead of that. Let's say we get above 6,000 by 10, 15 points, right? Get to 6,015 on SPX500 USD, because you always got to get about 10, 15 points above the 100 mark just to kind of squeeze all the shorts out. I noticed they like to push it up about 20 points higher than the 100 mark. But either way, near the end of the day tomorrow, make my decision. Let's say markets are still strong around 233, and so we got an hour left in the trading day, and markets are pretty high at that point, right around the I hate it when you get text messages during a video, lose your train of thought. So anyways, we're trending higher late day, and I'll be looking to go short, and then this next slide here I will show you why I believe markets will go down until roughly January 27th, or plus or minus a business day, so to speak. Thank you for joining me. If you haven't subscribed, please do. Trying to get up to, like, I don't know, 1 billion subscribers, right? And then obviously the business model is pure donation based. So hopefully if you're making some good cash, you'll want to throw some my way. That's the hope. Obviously, if not a lot of people do this over time, then obviously it's easy for me to walk away, easy for you to walk away, right? It's just donations, no subscriptions, no angry customers, because subscriptions only empowers people to be bitter, because you get 100 calls right and you get 1 wrong. They turn on you or whatever, or you get 5 right and 5 wrong, or 1 right and 5 wrong, which most forecasters do. This creates anger and bitterness and blah, blah, blah. So I learned very early that you don't want to have subscriptions. You want to do donations, because, no one can be pissed at you and be angry at you and tell you that they want their money back because they paid a measly $100 for a great system and you got one wrong, and they want all their money back because you got one thing wrong or you're not perfect. No, I'd rather be actually more donation based, because that way, if someone makes a lot of money and they want to give, that's up to them. If they want to be stingy, that's up to them too. I don't care. I do care, but I don't care, right? My job is to get you the best quality market timing worldwide. That's my job. Aside from having some, highly technical software program that is made by hedge fund Ivy League financial engineers, short of that, which I believe my model can compete pretty well with a lot of these guys and ladies. I think my model is one of the more competitive in the world, at least from that you're going to find, I believe, on YouTube. And honestly, the price is right? It's free unless you want to donate, which obviously I hardly encourage you to donate, because if it's competing with world-class algorithms and beating them hands down, time after time after time, I'm hoping that leads to generosity on the viewer's part. And a lot of entertainment, obviously, because it's kind of fun to watch, right? If you have a model that's really staying competitive with some of the best in the world, then it is just a ton of fun. And if you're predicting events before they even occur, it's even more tons of fun, right? So, with that said, we have the 1, 2, 3 on the green wave, so I'm hoping we get a nice big strong blast upwards in markets, or at least a nice big daily green candle on the 17th. That would be hope, right? It looks like it pushes past the 17 a little bit, so if we get a nice solid green candle on the daily scale on the 17th, I'll be looking to start taking my short position, which leads me to my next slide. How long do I want to hold my short position for? Well, me personally, let's see what the model says. I did a few back tests here for you, so you can zoom in on your smartphone or take a print screen of it and zoom in, whatever you want to do. Essentially, I went back in time, and the yellow 2 synced back with, I think, the early September bottom in markets, bounced off the top of that gold wave, and hits the center line on November 15th. Now, November 15th, I believe, was the lowest low during the trading out business day trading hours. So that was spot on, just skimming off the very top of that gold wave there. And then you have the white numbers, which we'll do last. Then you have the red number series, which you have the first number on the October 23rd low in the gold wave. And then it skims off the top of the gold top for number 2 around mid-December, and that hits the center line on the early morning hours of January 13th, which is where the lowest low was in markets, right, at that time. And then we go back to the white numbers. So then there's the 1, 2, 3, which hopefully this is, I don't know, I like the 1, 2, 3s better than I do, actually it's a 1, 2, 3, 4. The point in between 1 and 2 is actually another point 2, so that's actually 1, 2, 3, 4. So to me, the white 1, 2, 3, 4 has a bottom roughly on the early morning hours of January 27th. And again, all the holidays are taken out. There's not a January 20th or anything like that in this data series. So I took that out before I made this presentation, so you don't have to worry about that. But so I believe it's going to be January 27th plus or minus 1 business day. So with that said, I think that will be the lowest low in the markets. So what does that mean? That means on Friday, the 24th, if you see some huge low in markets, it could be the bottom, right? If we end the 24th like deeply red that day, and it's the lowest low since the high on January 21st or 17th, if it's the lowest low since then, odds are, it could be very much the low. It can't get super precise, right? It's in some people's terms, it's extremely precise. But in my terms, obviously, everyone wants it better still, right? So, anywho, so the projection is that the next bottom in the series will be January 27th in markets. So obviously that opens a whole another discussion of what are we doing into the Super Bowl peak? What kind of 5-wave structure are we actually making? And I don't really know, because in the first, this is a wave 2 up of sorts, I believe. Number 1, I think this is some kind of wave 2 up into the Super Bowl. Now, how choppy it gets, that's a whole nother discussion. I'm the type of guy that believes that in a bear market, your 2 wave is actually lower than where your first wave began. I know that for Elliot Wave people, that is completely contradictory to their belief system. Completely fine with me. In bear markets, I do not believe that the second wave begins higher, and many times, than the first wave where it starts. What do I mean by that? I mean that the January 13th low was actually the beginning of wave 3 up. So then we had a negative candle today on January 16th. Then we have a green positive candle tomorrow on the 17th. And that, to me, is wave 5. Because there was a green candle, like, I don't know, January, whatever, 8th, 9th, somewhere in there, right? We sold off the 6th, 7th. We had a 6 peak, and then it sold off into like the 8th or something. We had some kind of green candle in the futures there, and then we sold off again. So I think that was wave 1. Wherever that green daily candle was, that was wave 1 up. And then you had red candles down into January 13th low, and then you had a green candle. Had that huge green candles that the model predicted would happen for the 14th or for the 15th. That was predicted by the model. Yada yada yada. The model did wonderful on that. And that was like a wave 3 up, and then we had a red candle today. That's wave 4 down. And tomorrow, the 17th, if we have a nice big solid green candle finishing the day, to me, that is wave 5. Now, whether it's the end of wave 5 or if the 21st holds the end of wave 5, I don't know. But what I'm saying is, in a bear market, you cannot count 5 waves. Many people say, well, it's just a 3-wave then. Okay, that's fine. You can call it that. But I'm the one that believes that you're in a bear market because wave 2 starts lower than wave 1 started. And so that to me, number one, it breaks the structure, and therefore that's why you're in a bear market, because the 1, 2, 3, 4, 5 is not in some type of bullish pattern. It's in a broken pattern. And that's why I think the biggest, strongest leg up is wave 3, which most people agree. Wave 3 is the strongest leg up. So that's why I believe it's wave 3 off the January 13th low. That was the strongest wave up. And then we have wave 4 down today, and then wave 5 up tomorrow, hopefully. And that's how I build confidence in that I'm going to take my short, right? Obviously, my models help me a lot with that confidence, but that's how I read daily candles in line with the models. So that I just give you kind of some thoughts of mine. And again, you're completely free to have your own thoughts. I'm not here to dictate crap to anybody. It's not my job. I'm here to give you the best timing info that I can possibly give you. And at some point, I will tally up donations at the end of the month, and so you can see, how many donations have come in. If you trust me, I guess. I'll write it down below the videos too. Maybe that's a better way to do it. I'll write down below the videos. I'll put it in a slide or something, and that way, if you feel like, hey, this guy is, not making enough or whatever, you can donate. Or if you're saying, hey, he's making way too much, I'm never going to donate to this guy, whatever, or maybe you've lost money trying to use some of my timing before with your own indicators and never want to give, again, that's fine too. I get it. But obviously I want to be transparent with you, and obviously I want to make this something, in 3 to 5 years, we'll see if can get it off the ground where tons of subscribers, tons of donations, and you would need 3 years of some type of pattern, right, to prove that it's higher than your annual earnings, so that it could be sustainable, right? So your wife doesn't freak out on you, and after you make a good lump sum one year, and then you quit your job, and then all of a sudden you make nothing the next year, and then she's yeah, I'd get that lecture. And I'd be that guy that would do that, and then I'd look like a schmuck. And it'd take me 3 years to get, things back together. So I'm rambling at this point. It's late night. I've had a nice McFlurry from McDonald's. Yeah, we live near a play place, McDonald's with a play place. So my wife took the kids out tonight to hang out with a friend and get some Mickey D's. I was watching the babies, and yeah, this is my post bedtime bedtime stories break here, and so I'm decompressing as well. Anywho, yeah, that's what I've got for you today. So looking for a good solid week of selling off. It's coming like in 3 or 4 day candles, right? Each move up, each move down. So it makes sense. Peak 17th, you only get four weekdays next week. So could be about 4 candles long, the sell off. But as you can see, the 1, 2, 3 is pretty solid. And I cannot look at that and say, I don't see anything. It's very plain to me. And the other 1s and 2s have led to a decent bottom in markets. So I'm going to have to say, to me, it stands clearly out to me. So hopefully you've enjoyed the call that was called for January 13th, January 14th, January 13th and 14th bottom. I thought that was pretty phenomenal. Thank you for the donations, those of you who gave. And the one user that said that it was the best day they've ever had trading. So hopefully they made a ton. And that's the point, right? That's my prayer, is that someone out there, a few out there might make so much money they've never dreamed it would be possible that you could find someone on YouTube doing what I'm doing. I'm trying to blow some minds, break paradigms, break all the other words that I can't think of right now, mindsets. So many people say markets are rigged, you can't beat them. You can't time them. All the algorithms own everything. Blah 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 blah. Hopefully you can see that my model basically takes the harmonics of the algorithms and it figures out what they're doing. They create a footprint, and my model for some reason able to read the footprints like a book. So hopefully you're blown away by that. So enjoy the next trade. I'm looking hopefully to go short if we can get a nice 50-point run up tomorrow, something like there. Get back up near 6,000. I'd love to go short again. So until next time, hopefully you're blown away by the accuracy of the model. Right now it's at 100%, right? 2 for 2 in 2025. Can it go 3 for 3? Can the MJ model pull off another championship ring? 3rd call of the year. Can it do it? Can we get a peak to occur around the 17th, 21st, 22nd? And then drop for the 4th ring into roughly January 27th, plus or minus 1 day for the bottom. Until next time, I'm brschultzSP500, where historical data determines the future, and I do my best to keep it solely on the S&P 500. Thank you so much. Catch you later. Bye. And again, this model was also picking right around the March 21st, 24th bottom for markets for the major low with a zigzag, a 1, 2, 3 touch point, brschultzSP500. Systematic way of timing markets with a zigzag. And then this is the macro peak for December of 2027. So in a nutshell, in under 10 minutes, maybe near 5 actually, you've got the complete rundown from the macro to the micro to the micro to the macro. All right, race fans, I'll catch you later. Bye. So hopefully you've enjoyed my show today. Warning, this is all forecast use only. Come here. You want to read this for me? What does that say? Forecast?
Forecast.
Use?
Use only.
Only. Right. And what's this say?
Warning.
Disclaimer.
Disclaimer. I am not
A licensed investment professional. That's Latin. So say caveat emptor. Seek professional advice prior to investing. Bears risk
of
financial
loss.
Very good. And so basically this is saying if you ever try to invest in stocks or anything else, you could lose money. Warning, warning, warning. And all my graphs are subject to change. And not all the results are not always the same. Yeah. Thank you for reading for me.
You're welcome.
And that's it for today. I'm B.R. Schultz. Until next time, take care.